Yes, a very good evening to all of you. Right, so how are all of you? How is audit? I hope all of you are able to hear me. Right, audio, video, all good? Yes. Just want to get a confirmation from the students that audio, video, all good. You are able to hear me clearly. Okay, right. So let's get on a roller coaster ride. Let's take this as an opportunity to analyze and remember whatever we have studied regarding the subject. कि क्या क्या हमने पढ़ा है और क्या कितना आता है कितना नहीं आता है. That's all what we need to check out over here. Right. So yes, you've got a wonderful score so far. So going forward also I want you to get amazing score in the subject. Your concerns आप ना उसे डालते रहना YouTube chat box mein. But till that time, let me start having a discussion. Some of the names I'm finding them bit familiar, so that's nice to see you guys over here. Okay, right, so let's have a discussion of the subject. Let's start with say essay 570, which is regarding the going concern, right? A fundamental accounting assumption used by the management in the preparation of the financial statements. And as an auditor, I need to check that this going concern assumption, which has been used by the management in the preparation of the financial statements, whether it is appropriate. So as an auditor, we need to obtain the sufficient appropriate audit evidence about the appropriateness. Okay, management is saying we are a going concern, but you're saying really, are you a going concern? The appropriateness of the management's use of the going concern assumption in the preparation and presentation of financial statements, and to conclude whether any material uncertainty exists, due to events or conditions, whether any material uncertainty exists due to events or conditions which may raise a significant doubt on the entity's ability to continue as a going concern, right? Material uncertainty due to events or conditions which may raise a significant doubt on the entity's ability to continue as a going concern. You know what are these events and conditions? The financial indications, the operating indications, and the other indications. And what if there is a material uncertainty? What if the going concern assumption is not appropriate? If it is appropriate, it will be able to discharge its assets and pay its liabilities in the normal course of business, right? It will be able to discharge its assets and pay off its liabilities in the normal course of the business. However, if the going concern assumption is not appropriate, it is not a going concern, then it will be unable to realize its assets or discharge its liabilities in the normal course of the business, right? Unable to realize its assets and discharge its liabilities in the normal course of the business. Okay, so now very important, like you see the question bank of essay 570, and it is studded with questions over there. One of the most favorite standard of ICAI for asking questions in the exam. So we always need to consider, okay, what could be the impact of the going concern on the audit report, right? So we talk about the important discussion over here, which is regarding the going concern and the auditor's report, right? Where there are two possibilities of the conclusion. One possibility, auditor says going concern assumption is appropriate, but a material uncertainty exists. Due to events or conditions which may raise a significant doubt. And second one, going concern assumption is inappropriate. Auditor says, what are they saying? They are a going concern. This entity does not have a foreseeable future. They don't have any future. It's inappropriate. The use of the going concern assumption is inappropriate. So they have prepared their accounts on the going concern basis. Auditor says you are not a going concern. So obviously in that case, auditor will issue an adverse opinion saying that the financial statements do not give a true and fair view, because they should have been prepared on the liquidation basis, realization basis. So that is why we say they do not give a true and fair view. Right, going concern assumption is appropriate, but the material material uncertainty exists, like there is loss of key management without replacement, or there is a loss of the major customer market or so, or there is a adverse key financial ratios, negative operating net worth, substantial operating losses, non-compliance with law regulations. So now there is a material uncertainty. Now for this material uncertainty, you need to check whether the management has made the adequate disclosures in the financial statements, right? So if management has made the adequate disclosures in the financial statements, they are saying, okay, there is a loss of major customer, we are unable to repay the bank loan, we are having negative net worth. So management has made the disclosures in the notes to account. Then auditor, what you need to do, auditor, you will issue an unmodified opinion, right? Clean report saying that the financial statements give a true and fair view with a material uncertainty related to going concern para, right? Material uncertainty related to going concern para in your audit report, when there is a material uncertainty but management has made the adequate disclosures in the financial statements, right? So the financial statements, the notes to account disclose the fact. So if notes to account disclose the fact, then what? Right? Unmodified opinion with a material uncertainty related to going concern para. Second situation, management does not make the adequate disclosures in the financial statements. Adequate disclosures have not been given by the management in the financial statements. They are not saying that there are substantial operating losses, there is negative net worth, we are unable to repay the bank loan. Nothing is given in the notes to account of the financial statements. So now in this case, auditor, you will have to modify your opinion. That is, either you will have to issue a qualified opinion or you have to issue the adverse opinion saying that the financial statements are true and fair except for, or you say that the financial statements are not true and fair, right? So if management does not make the adequate disclosures. And third one, see, going concern, it is whose responsibility? Management's responsibility. So who should do the assessment of going concern? The management. And should auditor do from his side also? Yes, auditor will do from his side the assessment, but first it is the primary responsibility of the management. So you are requesting management, please do the assessment of the going concern, and management says we are unwilling. Management's unwillingness to do the assessment of the going concern, right? Management's unwillingness to do the assessment of the going concern. They are saying, no, auditor, you check whatever you want, but we are not going to check for the going concern. So now in this case, management is unwilling to perform some procedure, right? So in that case, it would be a limitation on scope. So SA 570 says, consider the implications on the audit. Right, so SA 570, 570 going concern says that consider the implications on the audit. Most probably it will lead to a qualified opinion or a disclaimer of opinion. Why? Because it is a limitation on scope. Right, so today what you can do, after, like right now we are having a robust revision over here, you can go to the question bank of SA 570, whichever author, whichever book or past questions of ICAI, and you need to see that whatever answers are given over there, they fall either into one of these four categories over there. Right, so in the exam also, when a question comes, you have to see, is going concern assumption appropriate or inappropriate? If it is inappropriate, straight away give an adverse opinion. It is appropriate and adequate disclosures have been made in the financial statements, then unmodified with the material uncertainty related to going concern para. Adequate disclosures are not made, then qualified or the adverse opinion, and management is unwilling to do the assessment, then consider the implications on the audit. Okay. Something related to going concern is now also there in Caro. Something, whether it is a going concern or not a going concern, now you're always required to check that in Caro. Anybody guess of the clause? Which clause am I referring to? Which clause am I talking about? Clause? Yes? Clause? Some clause, but which clause? Yes? Clause? You know how many clauses are there in Caro? You say, ma'am, we know there are 21 clauses. Wonderful. Do you know all the 21 clauses over there? That I'll come to know shortly. But right now, tell me, going concern related. Which clause in Caro? Clause? 19, correct, right? 18 is regarding the resignation of the statutory auditors. 19 is regarding the material uncertainty, the ability to meet the liabilities. Wonderful. Clause 19. How do you write the 19? You write it in small Roman numbers. Right? Going concern. Yes, wonderful. The material uncertainty regarding the ability to meet the liabilities. Okay, on the basis of the financial ratios, on the basis of the aging and the expected date of realization of financial assets and the financial liabilities. Right, then the other information accompanying the financial statements, the auditor's knowledge of the board of directors and the management plans. Whether the auditor is of the opinion that as on the date of the audit report, no material uncertainty exists, that the company is capable to meet its liabilities as and when they fall due within a period of 1 year from the balance sheet date. So simple language, you are doing a 1 year liquidity check. You are doing a 1 year solvency check. So say if the year ended is 31st March 2026, then what is the foreseeable future? 1st April 2026 to 31st March 2027. During this period, whatever liabilities of the company will fall due, whether the company will be able to meet its liabilities as and when they fall due within a period of 1 year from the balance sheet date is what is required to be reported under clause 19 of the CARO, the material uncertainty regarding the ability to meet the liabilities, right? Material uncertainty regarding the ability to meet the liabilities. Okay. Right. Now what we will do, we will go to the questions in the RTP May 23, right? So along with going to the questions, we'll happen to reach to different chapters also, and then whatever we want to discuss or if any particular topic you want me to take, तो वो भी discuss कर लेंगे, right? All you all good? Right? Sitting straight? Studying how many? Studying. How many hours? Right? Yes, 18 hours? Finale, no? It's like now the final, like the playoffs are taking place of the entire group 1, group 2, the entire journey, right? So I hope you are charged, motivated, absolutely on track for your preparation for the exams. Nothing in the world bothers you right now except for your studies. Right? In line, on track, MTP, RTP suggested writing practice, solving of question papers, preparing the notes, revising whatever you've studied so far. Is all of this happening? Yes. Can I believe that, if all of this is happening, then it's like, I know these are all my students. And then qualified under section 141 subsection 1 and 2. Okay, right. Anyways, let's proceed further so that it gives us an opportunity. And then RTPs, you can look at it, what do you say, the amendments. There is a separate video on YouTube, so you can look into that amendment video. But yes, as we go across through this RTP also, if we see any such questions over there, we will talk about them. Okay, right. So what does it say? 2/3 of the member. Okay, there is this definition. I want to give you an interesting question over here. Right. Do you know the applicability of CARO? CARO applicability? क्लासमध्ये जेवढी मुलं आली आहे त्या सगळ्यांना कारोची ऍप्लिकेबिलिटी माहिती आहे का? जो भी बच्चे क्लास में आए हैं उन सबको कारो की एप्लीकेबिलिटी पता है क्या? Yes. So anyways, and we are not here to check my language skills, but yes, do you all know the applicability of the CARO? CARO shall apply to every company, including a foreign company, except, what does it say? Banking company, insurance company, Section 8 company, one-person company, small company, and a private limited company, not being a subsidiary or a holding of a public company, having the paid up share capital and reserves and surplus not exceeding 1 crore as on the balance sheet date, total borrowings from banks, financial institutions not exceeding 1 crore during the financial year, and total revenue as disclosed in schedule 3, including revenue from the discontinuing operations not exceeding 10 crore during the financial year. For a private limited company, for CARO not to be applicable, all the three conditions should be cumulatively satisfied. Any one of the limit exceeded and CARO becomes applicable to a private limited company. Okay, let me give you a question. A private limited right? A private limited is having paid up share capital and reserves and surplus of 2 crore and is having the revenue of the 20 crore. Is Caro applicable to A private limited? Paid up share capital, PSC is what? Paid up share capital, and revenue is how much? 20 crore. Is Caro applicable to A private limited? Yes or no? Yes. Now I'm seeing your names over here. Very soon I'll be seeing your names in the, in the students who've cleared the CA exams. All these names before a prefix CA before their name. Very nice. Okay. Tell me, वो सब बाद में, पर अभी ये बताओ. That all later. Right now, tell me whether Caro is applicable to A private limited. Is Caro applicable to A private limited? Good, no, we met for the revision class. Otherwise, some problem would have happened. Everybody is saying yes. At least somebody say no. No, you won't say no. Why? Because paid up share capital, reserves and surplus exceeding 1 crore. So here it is 2 crore. And revenue as disclosed in Schedule 3, including revenue from discontinuing operations, 10 crore. Array, but what did we study in the applicability of Caro? That Caro shall apply to every company, including a foreign company, except banking company, insurance company, Section 8 company, one-person company, and the small company. Now here you see, for the purpose, what does it say? Small company will be defined as having paid up capital and turnover of the small company shall not exceed 4 crore and rupees 40 crore respectively. Right, so what is the definition of the small company over here? 4 crore and the 40 crore does not, paid up share capital does not exceed 4 crore and revenue does not exceed the 40 crore. So though it is exceeding these limits, but what it is a small company, and that is why Caro not applicable to A private limited. Did everybody get this one? Okay, though I agree it is exceeding the limit of 1 crore, 10 crore, but it is fitting into the definition of the small company. That is why Caro not applicable. Right, everybody, could you identify this particular question over here? Okay, right. So when we start looking at the RTP, there itself we find some treasure over there. And okay, this could be one question where they say, so in MCQ there could be a question, okay, whether Caro is applicable, not applicable, exempt or so. Okay, yes. So this is the question. Okay, right. Then after that, we come to the next one over there. We have the SEBI LODR, that is the listing obligation and the disclosure requirement regulation, wherein there are some new points which have been added, and so the composition of the meaning of independent directors. Right. So for this, you can go to the amendment video. Very important question over there is regarding the role of the risk management committee. Higher probability of the question coming in the exam. What if it doesn't come? Then it doesn't come. But is that a possibility of this question coming? Yes. So what is which companies are required to constitute a list management committee? Top 1,000 listed entities based on the market capitalization. And then what is the role of the risk management committee? Risk management committee, first they need to formulate a risk management policy. To formulate the risk management policy, first they should have a framework to identify the internal and external risk. Then once you identify the risk, what are the steps for mitigating the risk? And in spite of the risk, how will your business continue? Right, so there should be a risk management policy. Then based on the policy, accordingly your methodology, processes and systems should be in place. Then these risk management policy should be implemented to monitor and oversee the implementation of the risk management policy. Then once it is implemented, you're not done forever. You need to review the risk management policy at least once in every 2 years. Right, you need to review it at least once in every 2 years. Not that once you decide a risk management policy and always risk decided for. No, you need to review the policy at least once in every 2 years. Then what does it say? The risk management committee need to keep the board of directors informed about the nature and action of its discussions, recommendations and actions to be taken. They cannot work in isolation, the risk management committee. right? So they have to keep the board informed regarding whatever actions, recommendations are being taken by them. And in case if the risk management committee, if the company has a chief risk officer, then the appointment, removal, and the terms of remuneration of the chief risk auditor, if any, so not that they always need to have a chief risk officer, shall be subject to review by the risk management committee. Okay, right? So that is the role of the risk management committee, right? Then after that, you have the information to the shareholders, right? Then after that, the disclosures in the annual report. Then NBFC is it some interesting content which has come over there? They are talking about the layers of NBFC, right? What are the layers of the NBFC that they talk about over there? The base layer, right? Then the middle layer, then the upper layer, and the top layer. Also the categorization of the NBFC based on the specific activity being carried out. Again, a big possibility of this question coming in the exam. It is also there in the question bank of the RTP, right? So NBFC, which says which will always remain in the base layer, then those which will always remain in the middle layer, right? These two will always remain in the middle layer, and these ones, they could be in the middle layer or the upper layer, and this, it says it could be in any of the layers. Right? It could be in any of the layers, and government owned NBFC shall be placed in the base layer or the middle layer, as the case may be. This will not be placed in the upper layer till the further notice, right? So what you need to know, that there are 4 layers of the NBFC that they are talking about over here: the base layer, the middle layer, the upper layer, and the top layer, right? Base layer, what does it say? Non-deposit taking NBFC. Middle layer, deposit taking NBFC. Non-deposit taking NBFC below the asset size of 1000 crore. So non-deposit taking NBFC of asset size of more than 1000 crore, that is coming in the middle layer, right? So non-deposit taking less than 1000 crore coming under the base layer. Now non-deposit taking but asset size of more than 1000 crore or more coming under the middle layer. Then deposit taking NBFCs coming under the middle layer. Then NBFC undertaking the following activities: peer-to-peer lending, then the account aggregator, non-operative financial holding company, and not availing the public funds and not having a customer interface. So not having any customer interface. These will come in the base layer, right? What comes in the middle layer? All deposit taking NBFCs, then non-deposit taking NBFCs having asset size of 1000 crore or above and undertaking the following activities. Here, what does it say? Standalone primary dealers, infrastructure debt fund, non-banking financial company, core investment company, housing finance company, and the infrastructure finance companies, right? So which are the ones coming over here? Standalone primary dealers, then the infrastructure debt fund, core investment company, housing finance company, and the infrastructure finance company. And uppermost, it says the top 10. And the top 10 eligible NBFCs in terms of their asset size will always reside in the upper layer. And then you have the top layer, which it says will generally remain empty. But they can decide upon any NBFC to be shifted from the upper layer to the top layer. Okay, right? So certainly this is an important area for question to be coming in your exams regarding the levels of the NBFC. It could be the base layer, the middle layer, the upper layer, or the top layer. And then based on the activities also, what is the classification of the NBFCs? Then they said that everywhere, wherever they use the word forensic audit, now they say use the word forensic accounting. So, you know, God is great and boss is always right. So if boss says you should not call it forensic audit, everywhere you should say you're doing forensic accounting. So, okay, we'll call it that we are doing forensic accounting. And peer review, yes, I don't want to get into the discussion because today mainly I want to focus on the questions over there. But yes, in remaining 2 days, we'll also go through the peer review part. Okay. And something regarding ethics. Ethics, what do we say? NOCLAR. And NOCLAR, what do we say? It is applicable to the employees of the listed entities and also applicable to the auditors of the listed entities. But now what does it say? Applicable to employees of listed entities, only the senior professional accountants in service. So not to all employees of the listed entity. If you are the KMP, the key managerial personnel of the listed entity, then to you NOCLAR is applicable. And listed entity, which auditors is it applicable to? Those, if you are doing an audit of a listed entity having net worth of 250 crore or more. So earlier it was all listed entities applicable, but now what does it say? Applicable only to those employees of the listed entity who are the senior professional accountants. And second, it is applicable only to those auditors who are doing the audit of the listed entities having a net worth of 250 crore or more, right? Having a net worth of 250 crore or more. Okay, right. And now let's come over here to the questions, right? So few of the questions in the MCQ. J reported under clause 3A of the Master Direction NBFC Audit Report Direction that Good Deposit Limited is not eligible to hold its certificate of registration under 45IA. During the year, the net owned funds went below the minimum required limit, and net owned funds of 2 crore they need to maintain. Management of the NBFC had a different opinion that the certificate pertaining to the net owned funds from the statutory auditor is required with reference to the position of the company as at the end of the financial year and not based on each month's position. Kindly guide Mr. J with respect to the requirement. So April to March, for the entire year they have given the net owned funds, but if you see November 22 and December 22, it is less than 2 crore. 190 lakh, 180 lakh. So it says throughout the year they've not maintained the the net worth position, but at the end of the financial year they have maintained. So every NBFC shall submit a certificate from its statutory auditor that it is eligible to hold a certificate of registration. Such a certificate shall be with reference to the position of the company as at the end of the financial year, as at the end of each month, throughout the financial year, or again it says throughout the financial year, right? So it is as of the end of the financial year, as on 31st of March, right? As on 31st of March. Okay. Then J was of the opinion that the composition of the company's board of directors is not in compliance with the SEBI regulation. Kindly guide the management with respect to the provision which is not complied with by the management specified in regulation 17 of the SEBI LODR. Right. So whether regular non-executive, now what does it say? At least 1/3 of the board shall comprise of independent directors, at least one woman director, and not less than 50% shall be non-executive, and it says non-executive director. Now, where a regular non-executive chairperson is a promoter of the listed entity, right? So chairperson is a promoter or is related to the promoter or the person occupying the management position, or to people who are one level below the board. At least 1/2 of the board shall comprise of the independent directors, right? So non-executive, right? The chairperson of the board is non-executive. He is regular for the purpose of attending the board meetings, and he is not a promoter or not related to people one level below the board. In that case, 1/2 independent directors. But if he is a promoter or related to one level below the board, then in that case, 1/2 independent directors. Right? If it is non-executive, regular, not a promoter, then at least 1/3 independent directors. But if he is related to the promoter or to people one level below the board, then it says at least 1/2 should be the independent directors. At least 1/2 should be the independent directors. Okay. At the time of accepting the audit, the quality engagement partner objected that ABC does not hold a peer review certificate and cannot accept the statutory audit. J was of the opinion that they were falling under the level 2 category. Now level 1, level 2 outdated. And level 1, level 2 outdated. Now what does it say? Mandatory, voluntary, and the special case review. So what does it say? For listed entities, if you are doing the audit of the listed entities, then peer review is mandatory. So as per the peer review mandate, practice units who propose to undertake statutory audit of enterprises whose equity or debt is listed in India or abroad with effect from 1st April 22, they should be having a peer review certificate before undertaking the statutory audit assignment. What if they don't have a valid peer review certificate and they sign the audit report of a listed entity? Where in ethics will they be guilty of professional misconduct? Doing audit of a listed entity, not having a valid peer review certificate. In ethics, professional ethics, in which clause, which part, which schedule will the chartered accountant be guilty? If you have to do audit of listed entity, you should have a valid peer review certificate. पर अब नहीं है, फिर भी sign किया. Still you did the audit of a listed entity. You're not having a valid peer review certificate. Where you will be guilty of professional misconduct in ethics? Clause? Yes, Karo to no. Ethics. I'm asking about ethics. Clause? Yes, full answer should come. And like how rain falls from the sky, like that, here the answer should come. Yes, wonderful, amazing, mind blowing. What does it say? Clause 9 of part 1 of the second schedule. What is clause 9, part 1 of the second schedule? Fails to invite attention to any material departure from the generally accepted audit procedures applicable to these circumstances. Right? Clause 9 of part 1 of the second schedule. What is clause 9 of part 1 of the second schedule? Fails to invite attention to any material departure from the generally accepted audit procedures applicable to these circumstances. Right? So without holding a valid peer review certificate, if you do the audit of a listed entity, then guilty of professional misconduct under clause 9 part 1 of the second schedule. Right? Clause 9 part 1 of the second schedule. Wonderful. Okay, right. Anyways, let's go back. Okay, J wants to paragraph. However, management was of the view that audit partner was not right by disclosing the said matter in his report, as it was an internal matter and the audit team had not identified any material evidence which could impact the opinion of the auditor. Kindly guide Mr. J whether proposed reporting under emphasis of matter paragraph is correct. Now, basically, they are just asking you general questions over there, even if you don't read the case study, even though if you don't read the content over there, directly read the options. It is not related to the questions as such. Right? What does it say? In EOS is included in the audit report to a matter, although appropriately presented, disclosed in the financial statement, that in the auditor's judgment is of importance, that it is fundamental to the user's understanding of the financial statement. Right? So is it fundamental to the user's understanding or is it relevant to the user's understanding? Right? So it is fundamental to the user's understanding, not relevant. So relevant is what? That is other matter paragraph. If it is relevant to the user's understanding, that means it is the other matter paragraph. If it is fundamental to the user's understanding and clear reference can be given to the financial statements, then it should be coming under the emphasis of matter paragraph. But here, can you make a reference to the financial statements? No. So that is why reporting under the EOM is incorrect, right? That is why reporting under the EOM is incorrect. Okay. Kindly guide Mr. J regarding areas that he may need to report the absence of the internal audit function in the company in the audit report. Right? So where in CARO do you need to report regarding internal audit function? Clause, right? The auditor is required to report on basis of qualification, clause 13, clause 14, right? On key audit matter, right? So it needs to be reported under clause 14 of the CARO. What is clause 14 of the CARO? Right? It is the company, whether it has an internal audit system which is commensurate with the size and nature of its business, and whether the reports of the internal auditor for the period covered under audit have they been considered by the statutory auditors. So whether company has an internal audit system which is commensurate, which is matching with the size and requirements of the company. And second, what does it say? Whether the reports of the internal auditor for the period under audit have they been considered by the statutory auditors. Okay. Right. Newly qualified chartered accountant who cleared the exam just 3 months ago, immediately after qualifying started the sole proprietorship and mentioned FCA. Oh my God. अभी तो सीए बने, अभी तुरंत कैसे FCA at least 5 years of continuous practice or equivalent to that of being in practice for 5 years. An experience which is equivalent to that of being in practice for 5 years. Here, what does it say? Just yesterday, this generation became chartered accountant in front of me and they are saying FCA. No. Guilty of professional misconduct under clause 1 of part 3. My God, you guys are rocking. Of first schedule to the Chartered Accountants Act 1949, right? So yes, will be guilty, won't be guilty, out. will be guilty of misconduct under 711. 711 is advertises as professional attendance or services. Will be guilty under part 3 of second schedule, that is imprisonment for more than 6 months. Will be guilty of misconduct under 131. Yes, clause 1 of the part 3 of the first schedule. Okay. Then ADI and associates are the statutory auditors of Prakash for 22-23. While conducting the audit, Saurabh, the engagement partner, noticed the following: payments to various government employees not supported by any document, notices received from the regulatory authority, payments of fines and penalties, heavy payment to the legal counsel, and unusual cash payment. Right. So if you see over here, there are all the points which are given regarding the payments and fines and penalties, legal counsel, cash payment, government employees. Right. So what does it say? Doubt on the accounting system, doubt of the non-compliance, doubt on the going concern, doubt on the internal control. Right. So it is regarding the indications of the non-compliance, the doubt of the non-compliance to laws by Prakash Limited. Okay. You have been given an assignment of audit of IT department of a PSU. A checklist was handed over to you which contained many questions such as: are external data backups maintained at a place outside the premises? Are separate username and passwords assigned to individual users? Are periodical changes of passwords ensured? The type of audit being conducted is likely to be compliance audit, propriety audit, comprehensive audit, or the financial audit. So propriety, so we are not looking for any unnecessary extravagant expenditure. We are not expressing an opinion on the true and fair view. We are not checking the efficiency, effectiveness of the enterprises. What we are checking is the checklist which contains many questions, and we are checking the compliance with the same. So that is called as the compliance audit. Okay. Right. Then Sudarshan and company was one of the joint auditors. While examining, he found the following: payment of salaries to employees shown in employee remuneration and welfare benefit account, reimbursement of premium shown in employee remuneration and welfare benefit account, training and non-training expenses again in employee remuneration and welfare benefit account, expenses incurred towards the medical treatment of the employees, employee remuneration and the welfare benefit account, and incentives paid to employees of the company who solicited the insurance business being shown under the commission account. Right. So what is the problem over here? Non-training expenses have to be shown separately, and incentives paid to employees should be included in the employee remuneration and the welfare benefit account. Okay. And the last one over there, Paras Limited had an NPA of Su Paras showing recoverable amount of 35 lakh. It sold the NPA for 37 lakh. Right. So you have an NPA of 35, you sold it for 37. That means you sold it at a profit. And you have sale purchase of the NPA. Please select as to which of the following options is correct. Right. So credit the excess of 2 lakh to provision for loss on sale of NPA. Let the amount remain. Credit the excess to profit on sale. No. Return 2 lakh to the party purchasing. No. So credit the excess of 2 lakh to provision for loss on sale of the NPAs. Right. So you need to make the provision. Okay. Right. So every time, now there is not too much of time for you to study, but even though whatever remaining time you are dedicating to the preparation of audit, एक काम जरूर कीजिए. One work, do it for sure. Okay, RTP May 23, MTP May 23 series 1 and 2, then RTP November 22, then MTP November 22 series 1 and 2. At least these 6 papers, go through the MCQs. Go through other MCQs how much ever possible, but at least to get a hang, to get a finishing touch to your preparation, go through these particular MCQs, because MCQ is all about your guessing skills and your confidence in selecting the answer. Right? And that I know you have developed it, but now you need to just brush that skill set of yours. Okay, don't be in the madness now of studying something new or knowing something more, or having more of knowledge now. Now it's not the time for that. Now whatever knowledge you have, whether you are able to write it out in the paper, whether you are able to express it in the paper, whether you are able to identify the correct question, whether you are able to identify the points which are required to be written over there, work on that. Because it's finally a probability. No, you study so many chapters and so many all this, pata nahi ki whether that will come or not come. It's 1 in 1,000 probability or 1 in 2,000 probability. But whatever comes, I should be able to write it excellently, in a superb, amazing manner. I hope you agree with me on this. Okay, right. So now let's come to the descriptive questions. Okay, standards on auditing. Mangal and Company Chartered Accountants have been appointed as statutory auditors of Money Limited. The audit team has completed the audit as in the process of preparing the audit report. Management of the company has also prepared the draft annual report. Audit in charge was going through the draft annual report, that means other information, and observed that the company has included an item in its annual report indicating downward trend in the market prices of the key commodity raw material as compared to the previous year. However, the actual profit margin of the company as reported in the financial statements has gone in the reverse direction. That means there is a material misstatement in the other information. There is a material misstatement in the other information. Which auditing standard are we talking about? SA 720, the auditor's responsibilities relating to other information. Audit manager discussed this issue with the partner of the firm, who in reply said that auditors are not covered with such disclosures made by the management in its annual report, it being the responsibility of the management. Do you think that the partner is correct in his approach on this issue? Discuss with reference to the relevant standard the auditor's duty with regard to the reporting. Right? So what is it? There is a material misstatement of the other information. If you look at the answer, they start in such a wonderful way over there. It says description of trends in key market prices is one of the example of the example of the amount or other items that is to be included in the other information. Right? So description of the trend in the market prices is one of the example of the amount or the item to be included in the other information. The auditor's discussion with management about a material inconsistency or information that appears to be materially misstated may include requesting management to provide a support for the basis of management statements in the other information. Based on the management's further explanation, the auditor may be satisfied that other information is not materially misstated. For example, management explanation may indicate reasonable and sufficient ground for valid differences of judgment. So there might be a valid reason why your profit is being seen, but your downward trend of the prices is being seen. Possible. Now, what is auditor's duty? This is what we study in the standard. As per SA 720, the auditor's responsibility in relation to the other information, if the auditor concludes that a material misstatement of the other information exists. And the material misstatement of the other information exists, and this the auditor has come to know before the date of the audit report, before the date of the audit report. And now two possibilities: management agrees to correct, management does not agree to correct the other information. Right, the auditor shall request the management to correct the other information. So if you come to know about a material misstatement in the other information, what you do, you request the management to correct the other information. And then what may happen? Two things may happen. Management may correct the other information, or management may not correct the other information. If the management agrees to make the correction, then auditor determine that the correction has been made. Just check, just ensure whether the correction has been made. And if management refuses to make the correction, they say, no, auditor, here we will show downward only, whereas actual profit increasing, auditor will communicate it to TCWG and request that correction be made. But say after communicating to TCWG, also if they don't correct, right, then after that, auditor, you need to consider the implications on the audit report. Yes, you need to consider the implications. Okay, right. Next one, very interesting offbeat question over there. What does it say? P is the auditor of Master Data Limited for 21-22. The company requests the auditor to undertake an exercise involving the verification of the trade receivables for the half year 30th September 2021. The company wants to be satisfied that trade receivables are properly confirmed and reconciled. In this regard, P has to verify the arithmetical accuracy of the trade receivable, obtain confirmation of the trade receivable, and ensure verification of the proper reconciliations with the confirmation. He is in a dilemma as to whether he can give a report providing assurance to the company in this respect. Guide CAP with reasoning. Assume that above exercise can be undertaken and there is no legal bar. Right. So basically over here, we first need to know a preliminary understanding that what are the engagement and the quality control standards issued by ICAI, standards on auditing, then the standards on the review engagement, then the standards on the assurance engagement, standards on the related services, and then you have the standard on the quality control. Right. So here it is, what does it say? Audit, review, any assurance engagement other than audit or review, any assurance engagement other than audit or review, or you could be providing the related services, right? In an audit, you give a reasonable assurance that financial statements are free from material misstatement. In a review, you give a limited assurance that financial statements are free from material misstatement. Other assurance, depending upon the nature, you give the moderate assurance, right? You give some level of the assurance. But in case of the related services, what does it say? No assurance is given by the auditor. It is neither an audit nor a review, right? So one of the type of the related services engagement is the agreed upon procedures, right? Engagements to perform the agreed upon procedures regarding the financial information, right? So in the question given over here, the management is asking the auditor to perform the agreed upon procedures, for which auditor will not issue any audit report. He will not give any audit opinion or any review conclusion. No audit opinion or the review conclusion in the given case. Like confirmation for a particular debtor, the auditor can issue an audit assurance report in case of audit and review. By providing assurance, the auditor provides comfort to the users. Assurance in the above context refers to the auditor's satisfaction as to the reliability of an assertion made by one party for use by another. To provide such assurance, the auditor assesses the evidence collected as a result of the procedures conducted and expresses a conclusion. However, the type of services given in this situation is in the related services domain. These are in the nature of the agreed upon procedures to be carried on by the auditor. The auditor cannot issue an assurance report while providing such kind of these services. He will only issue a report stating the facts as they are without providing any sort of assurance. He can report only the facts. Rather, the report is called as report on factual findings. And a report on factual finding. Therefore, the auditor cannot give a report providing assurance for such type of services. He can only issue a factual report, right? He can only issue a factual report. Okay. Next one is Krishna is a small size company having business of pipes. Company has a plant based and they have appointed a chartered accountant firm. The statutory auditor wants to enter into an engagement letter with the company in respect of their services. But the management has contended that since the statutory audit is mandated by law, engagement letter may not be required. Auditors did not agree to this and have shared a format of engagement letter with the management. In respect, management would like to understand that as per SA 210, if the agreed terms of the engagement will be recorded in an engagement letter or other suitable form of written agreement, what should be included in the terms of the agreed audit engagement letter, right? So basically the question over here is regarding the principal contents of the audit engagement letter. Yes, what are the principal contents of the audit engagement letter? The objective and scope of the audit, then the responsibilities of the auditor, the responsibilities of the management, the identification of the AFRF and the expected form and content of the report, right? So principal contents of the audit engagement letter, right? So as per SA 210, right? These are the principal contents of the engagement letter. Okay, right. Then Suvarat Limited had a net worth of 2100 crore and Ind AS are applicable to them. The company had various derivative contracts, and what does it say? The statutory auditors involved an auditor's expert to audit valuation of derivative. Auditor and auditor's expert were new to each other. That is, they were working for the first time together but developed a good bonding during the audit. The auditor did not enter into a formal agreement with the auditor's expert. No. Right? So this is a question from SA 620 which talks about why there is a need to enter into a detailed agreement. Why there is a need to enter into a detailed agreement between the auditor and the auditor's expert. Okay, now, yes, all of you there? How do I come to know that you are there? How do I come to know that you are going to do marvelous job in the exams? Is the notebook in front of you? Do you have a pen in your hand? Assume that this question is come in the exam. है ना? Say you're going for the exams और ये question वहां पे आया है. Now write down the answer. Don't no, I revise it and then you remember, these are the points, or no. As the question has come in the exam and you have to write down the answer. Let me see what amazing job you do over there. Start writing. Start writing. Let me see. Right? How much half page answer? 6-7 lines answer. At least you should be able to write. Yes. लिखो लिखो लिखोगे तो पास हो जाओगे. Simple. But you have to write the correct things, right? Anything you won't pass. And you write the correct things, then you will pass. Why is there a need to enter into a detailed agreement between the auditor and the auditor's expert? You know, they developed a good bonding, so it says no need to enter into formal agreement. Should there be a formal agreement? Right? Is there a need for entering into a formal agreement? You say, ma'am, yeah, I vaguely remember we've studied this in 620, or if you've studied on your own also. But देखो ना, मतलब ये output, you should reach to this output. Okay? You'll say, ma'am, this is a very simple question asked in exam. So what do you think? Everything is going to be complicated only? No, they will ask simple questions also. But simple question, answer not simple. No, that is the problem. Finished writing? Finished? Some of you are typing the answer here. Very smart. I hope, thank God that you didn't tell ChatGPT to give the answer. वही अब बाकी है कलयुग में होना. Okay, right. So anyways, yes, I wish you could have put your book in front of the camera and I could have seen what amazing, marvelous answers you've written over there. पेन उठाया, बुक ओपन किया? नहीं, एकदम ऐसे रॉक सॉलिड हो, नहीं सुनोगे किसी का? You won't listen? Now you're opening the book. अरे सुन लेने का. Easy. Your life is easy, others' life is easy. Yes. What are the points? Tell me in the chat box. Okay, why is there a need to enter into a detailed agreement between the auditor and the auditor's expert? Why is there a need? Because the matter is highly complex. You've not previously used the work of that expert, right? Then the need for the expert to observe the confidentiality requirement. Then multi-jurisdictional legal regulatory requirements apply. Then to make clear what are the responsibilities of the auditor and what are the responsibilities of the expert. And to make clear the responsibilities of the auditor and the responsibilities of the expert. Okay, right? So that is why there is a need to enter into. Why? Because you will be giving access to the expert, because sensitive confidential information. Then the matter is highly complex. You've never used the work of that expert before. And the greater the extent of the expert's work and its significance in the context of the audit. Okay, right. Next question over there. Right, what is the next question? During the course of audit of Treasure Limited, CA Gautam is concerned with the quality and effectiveness of internal control. Towards achieving his objective, he wants to assess and evaluate the control environment. So guide CA Gautam with well-defined set of the standard operating procedures in the assessment and evaluation of control. Right, so internal control assessment and evaluation. That is the question being asked over there. Internal control in the chapter of risk assessment, internal control assessment and evaluation, right? The internal control assessment and evaluation. So in the internal control assessment and evaluation, one, you need to check whether they have the standard operating procedures, SOPs have been laid down, right? Then after that it says whether there is a proper enterprise risk management. Then there is proper ITBC. What is ITBC? Information technology based controls, the general IT controls and the application control. And then in addition to that, you need to check whether there is proper segregation of the duties, whether whether there is delegation of the authority and the responsibility, and also whether there is the rotation of the employees, right? So this is where we talk about the internal control. The risk is internal control assessment and the evaluation, right? So well defined set of the standard operating procedures. What does it say? SOP, standard operating procedures, enterprise risk management, and then after that it talks about the ITBC, the information technology based control. And apart from that, the segregation of the job responsibility, job rotation in the sensitive areas, and the delegation of the financial power document. Okay. Right. So that is regarding the internal control assessment and the evaluation. Okay. Right. Apart from that, you have another question over there. Auditors are required to obtain an understanding of internal control relevant to the audit when identifying and assessing its effectiveness and risk of material misstatement. During the audit of Acharya Limited, you observe that significant deficiency exists in the internal control system and you want to ascertain the same. Eliciting the various indicators of the significant deficiency which will help you in assessing the efficiency of internal control system of the organization, right? So basically the question is regarding the indicators of the significant deficiency in internal control, right? The indicators. Okay, because of what reason you might say, oh, this is a big deficiency in the internal controls in the organization. What could be a big deficiency? Okay, during the year in the company a management fraud has taken place. Transactions in which management is financially interested, nobody is checking those transactions. Are you understanding that? What's that? That's an indicator of a big problem, of a big deficiency in internal control. What does it say? There are instances of the management fraud. Transactions in which management is financially interested, nobody is checking. Management is failing to implement the appropriate remedial action. Right, then one of the element of the controls in the organization is the risk assessment. In this company, there is no risk assessment process only. In this company, there is the risk assessment process, but it is hopeless. It is ineffective. It is not able to identify the RMM only. The risk is there. Process is there. Risk is also identified, but they are just looking at the risk. Oh, risk. Why so much of risk in my life? Why so much of risk? You just can't look at the risk. No, you need to respond to the risk. So ineffective response to the identified risk. Ineffective, ये लिखना है सब एग्जाम में. You can't write anything on your own. You have to write down this when they ask a question on the indicators of the significant deficiency. Okay, this company, the management fraud are taking place, transactions in which management is financially interested, not being scrutinized, then management's failure to implement the remedial action. Then after that, what does it say? Absence of a risk assessment process, ineffective risk assessment process. Then after that, ineffective responses to the assessed risk. Then misstatements detected by the auditor, which should have been detected by the entity's internal control. Then disclosure of a prior period item coming in the current year, and management's inability to oversee the preparation of the financial statements. Right? What are these? These are the indicators of the significant deficiency. Okay. Next one. Wish for New Foundations Limited, a pharmaceutical company, collected the data for some hospitals and their experts tried to understand the medical needs of elderly people. After complete study, their experts developed an application where this company will provide complete health care if customers download this application. CA Sheetal in his audit, right, has used data analytics method, also known as the computer assisted audit techniques. Give illustrations of the suggested approach to get the benefit from the use of care. See, you have to identify the question correctly. So full confusion in the exam. No use of you knowing the content. Give illustrations of the suggested approach to get the benefit from the uses of cats. So basically, what is the question? What are the steps to be followed in the uses of the cats? Right? What are the steps to be followed in the uses of the cats? So first you need to understand the business environment, including the IT. Right, so first step is what? Understand the business environment, including the IT. Then define the objective and the criteria. So this is your objective part. Right, this is your objective part. Then after that comes the procedure part. Right, then after that we have the procedure part. Right, in the procedure part, now what does it say? You know the criteria, but on what you need to apply the criteria? You need to identify the source and format of the data. Okay, say you want the PPE registered, then you need to extract that data. Then whatever data you extracted, you need to check the completeness and accuracy of the extracted data. Then you apply the criteria on the data obtained, and then you validate and confirm the results, and finally you report and document the results and conclusion. Right, so objective, then procedure, and then the conclusion. Right, the suggested approach to get the benefits from the uses of cats. So don't write down what are the uses of cats, okay, or don't write down the benefits from the uses of cats. You have to write down the approach. That means you have to write down the steps to be followed in the uses of the cats. Right, what are the steps to be followed in the uses of the cats? Okay. Next one, Liu Private Limited is a company based out of Mumbai. The company had an authorized capital of 200 lakh and paid up capital plus reserves of 95 lakh as of 31st March. During the audit of YS and Associates noted the following points. The company had total bank borrowings of 75 lakh. On the said date, the company received a new loan of 30 lakh for a new project that was to be developed. However, the project was shelved on to 17 December due to technical reason, and the whole loan was paid on the same date. Right, so they got an additional loan, but at any point of time during the year, did the loan amount exceed 1 crore? Yes. Then during the financial year, a new proceeding was initiated against the company for holding a Benami property worth 2.5 crore. However, the company's legal team had advised that the case would not withstand the law and would be dismissed during the hearing in April of the next financial year. Right, so now what does it say? Whether any proceedings have been initiated. Which clause? In Caro, which clause this is? Clause 1. Yes, subclause 5. Whether any proceedings have been initiated or are pending against the company for holding any Benami property under the Prohibition of Benami Transaction Act, whether the details have been disclosed in the financial statements, right? So whether any proceedings have been initiated or pending. The company has incurred a cash loss of 39 lakh during the year compared to a cash profit of 15 lakh in the previous financial year. The total turnover of the company was 45 crore, right? So turnover is 45 crore. Company has incurred a cash loss. So this is coming under clause 17. What is clause 17? Whether the company has incurred cash loss in the financial year and in the immediately preceding financial year. And during the year, the YS and Associates had offered to resign from acting as the company auditor. However, they later decided to postpone their resignation. So first they thought, let us resign. Then they said, let us continue. So have they resigned? No. If they had resigned, then it would have been clause 18, resignation of the statutory auditors. But here they have not resigned. Okay. At the conclusion of the audit, there was a difference of opinion between two article clerk, Jack and Jill, who were assigned to the engagement concerning disclosing the points mentioned above. Jack was of the opinion that proceeding initiated under Benami property need not be disclosed, since the legal team said that it would not withstand the law. However, he insisted that cash loss shall be disclosed along with the amount. Jill was of the opinion that Caro is not at all applicable to the company, hence nothing needs to be reported. They both approached the firm partner to resolve their argument, and as the senior partner can kindly clarify the correct disclosure requirement. Right, so what does it say? First you write down the applicability of the Caro, yes, and then after the applicability of the Caro, the borrowings are less than 1 crore as on the balance sheet date, but the turnover is greater than the 40 crore, and at some point of time during the year the borrowings have been more than 1 crore. Right, then as per clause 1E of the Caro, any proceedings have been initiated or pending against the company for any Benami property, whether the details have been disclosed in the financial statements. Then clause 17, whether the company has incurred cash losses in the financial year and in the immediately preceding financial year. Then clause 18, the auditor shall include a statement whether there has been any resignation of the auditors, whether the auditor has taken into consideration the IOC, the issues, objections or concerns raised by the outgoing auditor. In the case there has been no resignation made by the auditors, the mere fact that YS was thinking of resigning does not matter in the current scenario, and hence this clause shall not be applicable in the given situation. Right, so not applicable in the given situation. Okay, right. Coming to the next one. What does it say? Right? K is appointed as statutory auditor of Seek India Private Limited under the Companies Act. The company is preparing its accounts considering the applicable requirements of Division 1. It was noticed that the account showed the aging of the trade payable, and besides above, current ratio, debt equity ratio, trade payable turnover ratio, yes, have slipped drastically as compared to the last year, right? So if you see over here, yes, less than 1 year, 1 to 2 year, 2 to 3 year, more than 3 year, others, right? And then after that it says all these ratios have slipped, right? Most of the key financial ratios are in the red. So when you start reading this, what smell you start getting? You get any smell? You literally, you're checking with your nose. Are you getting any smell? What we started our discussion today with? It is the question regarding the key financial ratios are in the red. There is no other relevant information concerning above in the notes to account. You should be able to smell SA 570, correct, which is regarding the going concern. On reviewing the bank statement of cash credit limit, it was noticed that there is no debit transaction in the month of March. On inquiry, he came to know that the company's stock audit was conducted and stock auditors have commented that the company had negative operated drawing power due to high creditors. Accordingly, the bankers have refused further debits in the cash current account. Further, upon inquiry with the management, it was identified that management did not have any major future contracts to boost their revenue and financial position. There is no information in this respect in the financial statements and the notes to account. Right? So is there a material uncertainty regarding going concern? Yes. Whether adequate disclosures have been made by the management in the financial statements? No. Discuss how CAK should deal with the above for reporting in his audit report under the Companies Act 2013. Right? So all you first write down whatever has happened, the aging and then the adverse key financial ratios and so. Right. All the above factors are indicators that a material uncertainty exists that may cast a significant doubt, very good, on the company's ability to continue as a going concern. There is no express disclosure of this fact in the financial statements. Therefore, it is a situation where material uncertainty exists, that which has cast a significant doubt on the entity's ability to continue as a going concern. Considering above the fact that although a material uncertainty exists, casting a significant doubt on the ability of the company to continue as a going concern, adequate disclosure of uncertainty is not made in the financial statements. Thus, CAK should give a qualified or an adverse opinion in accordance with SE 705, modifications to the opinion in the independent auditor's report. Is it clear to all of you? Yes, were you able to apply the knowledge, whatever we just studied at the beginning of class today? Such a big story, but we know what is the answer to be written. Listening now? Listening to me? Okay. Next one. Right? Sit straight. Yes, Bharat has been appointed as the statutory auditor of Rishabh Limited for 21-22. The company, while preparing the financial statements under audit, prepared one additional profit and loss account that disclosed specific items of expenditure and included the same as an appendix to the financial statement. Bharat has not been able to understand this as the additional profit and loss account is not covered under the AFRF, the applicable financial reporting framework. Guide him as to how he should deal with this issue while reporting on the financial statements of Rishabh Limited. Right? So what is the question regarding? Yes, what is the question regarding? With standard SA 700. The question is regarding the supplementary information, right? SI, supplementary information. So now what does it say? Supplementary information, is it an integral part of the financial statements? No. If it is an integral part, you cover it in your auditor's opinion. It is not an integral part. Then you ask yes, you check whether supplementary information has it been clearly differentiated. That is, the heading should be unaudited supplementary information, unaudited additional profit and loss account. If it is clearly differentiated, great. If not differentiated, then you ask the management to differentiate to how the supplementary information has been disclosed. If management does not agree, then what you need to do, you need to consider the impact on the audit report, right? You need to mention it in your audit report. So if supplementary information that is not required, you you need to check whether it is an integral part. If it is an integral part, you cover it in your auditor's opinion. However, if it is not an integral part, then what you need to see, check whether it is clearly differentiated from the audited financial statements. If this is not the case, then you ask the management to change how the unaudited information is presented. If management refuses to do so, then the auditor will identify the unaudited supplementary information and explain in the audit report that such supplementary information has not been audited. Yes, are you getting this one, everyone? Yes, SE 700, supplementary information. So number one, what you need to check, supplementary information, is it an integral part of the financial statements? If it is an integral part, cover it in the auditor's opinion. It is not an integral part, then what you need to check whether it is sufficiently and clearly differentiated. If not differentiated, then ask management to differentiate. If management does not agree to differentiate, then you mention about it in your audit report. Right, then you mention about it in your audit report. Okay, right. Vishnu is the auditor of Brilliant Limited, a parent company which presents consolidated financial statements. The management of Brilliant has provided the list of components included in the CFS. As an auditor, CA Vishnu has to verify that all the components have been included in the CFS and review the information provided by the management in identifying the components. Right, state the procedures to be followed by CA Vishnu in respect of the completeness of this information. Right, so to check whether all components are nothing but my subsidiary, associate, joint venture, which are nothing but my related parties. So now if I ask client, how many subsidiaries you have? Client is saying we are having 200 subsidiaries. But now as an auditor, I want to cross check. Really, client, do you have 200 subsidiaries, or is it that you have 210 subsidiaries and 10 subsidiaries you are not disclosing, or you have only not identified them as your subsidiaries? So whatever audit procedure we perform to identify related party, same audit procedure we can perform to check whether all components have been included. Completeness means what? All. So whose responsibility to identify all the components? It is the responsibility of the management. So one, what we will do, we will review the parent's procedure for identification of the components. Right, then we'll review the working papers of the last year, because that will give us at least a starting point. Right, then you will make inquiries of the management to identify any new component or any component which goes out of the CFS, okay, no longer a subsidiary or no longer an associate or so. Right, so make inquiries of the management. Then what you do, you ask management what all investments have been done during the year, what joint ventures have you entered during the year, any other arrangements entered during the year, then the statutory records maintained by the company, any changes in the shareholding of the company. Right, so this is what you indirectly are checking. I ask them directly, how many subsidiary companies? They say 200. Are you going to blindly rely on that? They are telling 200, so should be 200. No. What you will do, you will indirectly check. You will say, show me all your investments. Oh, you invested in this company 60%. This is not shown as your subsidiary. What is this? You review the statutory records maintained by the entity, the joint ventures, the other arrangements, any changes in the shareholding of the company. Right? So those are the audit procedures to check for the completeness of the components. Okay. This is an interesting new question which is over there. Both Limited is enjoying cash credit facility sanction from Nariman Point, Mumbai branch of KNB Bank of 250 crore. However, for practical consideration, various sub-limits have been fixed for the borrower company for operation at Solapur, Pune and Nasik branches of the same bank. Right, so total limit is 250 crore, but what does it say? Sub-limits have been set for Solapur, Pune and Nasik. The manager of the Solapur branch notices that there are no credit transactions in this sub-limit account being operated at the Solapur branch for more than 90 days. Discuss the approach of CA Muni, statutory branch auditor of Nariman Point branch, Mumbai of KNB Bank, in the matter of the asset classification of the above borrower account. Also discuss considerations for classifying the said account at the Solapur branch. Okay, right. So whether you need to consider the limits at the company level as a whole, or for a particular sub limits for the branch, because no credits continuously for 90 days. Then what do we say? It becomes an NPA. And CC limit out or CC limit overdraft. When does it get an out of order status? When that exceeds the sanction limit, or there are no debits or credits continuously for 90 days. So here what does it say? In the Solapur branch, there are no credits continuously for the 90 days. Okay, so sometimes the customer is sanctioned a credit limit at one branch but is authorized to utilize the limit at such as several other branches also, for each of which a sublimit is fixed, right? So there is a limit, and for each branch there is a sublimit. In such a case, the determination of the status of the account as NPA or otherwise should be determined at the limit sanctioning branch with reference to the overall sanction limit, and not by each of the other branches where a sublimit has been fixed, right? So at the overall level, the auditor of the limit sanctioning branch, that is the Nariman Point branch, should examine whether it receives particulars of all the transactions in the account at sublimit branches, and whether status of the account has been considered, considering the total position of operation of the account at all the concerned branches. The standalone matter of no credit transactions for more than 90 days at Solapur branches, irrelevant. You need to check it at the Nariman Point level and not at Solapur, Pune, Nasik level. Okay, hence keeping in view of the above, CA Muni should consider asset classification considering the total position of the operation of the bank at all the concerned branches. And regarding sublimit at the branches, that is at a particular branch, the classification adopted by the limit sanctioning branch should be followed. Hence the Solapur branch has to follow the asset classification made by the limit sanctioning branch, right? So whatever classification is done by the Mumbai branch, that classification needs to be followed, right? That classification needs to be followed. Okay, right? So that's an important question, right? You can highlight it for your revision one day before the exam also. CA Gunjan is conducting the tax audit of a company. The client is engaged in the business of manufacturing and export of the carpets, turnover 100 crore in 21-22. The financial statement of the company show amount of 4 crore credited in the P&L on account of the duty drawback. How should she perform audit procedure to comply with specific reporting under Form 3CD in this respect? And it was noticed that an amount of 5 lakh of duty drawback pertaining to few export shipments have not been credited in the P&L. Not been credited in the P&L means clause. See, one is amounts debited to P&L, which should not be debited, but you are debiting it to P&L. Amounts debited to P&L. And one clause in the Form 3CD is the amounts not credited to P&L. So what you should have shown as your income, but you're not showing it as your income. Amounts not credited to P&L. Which are these two clauses? Amounts not credited to P&L clause, right? Clause 16 of the Form 3CD, and amounts debited to P&L, that is the clause 21 of the Form 3CD. Right, so clause 16 and clause 21, right? So amounts not credited to P&L, right? So duty drawback, which has been admitted as due by the authorities. The above was admitted by the customs authority. However, it was electronically transferred to the bank account of the company in the next financial year. How she should deal with this matter, right? So basically the question is regarding the clause 16 of the Form 3CD, right? Where pro forma credit drawback refund of duty has been admitted as due by the authority concerned. All relevant correspondence, what does it say, have been admitted as due by the authorities. Therefore, the tax auditor may need to scrutinize the relevant files, right, relevant relating to such refund. Yes, besides, appropriate representation should also be obtained. And a drawback of 5 lakh is noticed as admitted by the customs authorities, which was not credited. Yes, to the P&L. A company has to maintain accounts on the accrual basis in accordance with section 128. As admitted drawback has not been credited in the statement of the profit and loss, the same should be reported under clause 16B of Form 3CD. Right. Yes. Can you tell me clause 35 of Form 3CD? Can you quickly tell me the clause 35 of Form 3CD? Is there a clause 35? Here now. Total 44 clauses are there. So clause 35 is there. Yes. What is clause 35 of Form 3CD? Yes, good. Quick answer. Quantitative details in case of a trading concern and in case of a manufacturing concern. Raw material, finished goods, opening stock, add purchases, less sales and the closing stock. Right, so quantitative details in case of a trading concern and in case of a manufacturing concern. Are you getting that? That is the clause 35. Okay, what is clause 11 of the Form 3CD? clause 11 of the form? I'm discussing form 3CD. What is clause 11 of the form 3CD? Clause 11. Yes, it is regarding the books of account, right? Then the list of the books of account and also the address where the books of account have been maintained, right? So the books of account, the list of the books of account, and also the address where the books of account have been maintained. Okay, right? So that is regarding the clause 11, right? Which is regarding the books of account, which is regarding the books of account. Okay, what is clause 17 of form 3CD? Clause 17 of form 3CD, whether any clause 17 of form 3CD, land or building or both have been transferred during the previous year at a value less than the value adopted, assessed, or assessable under the risk by the valuer, right? So transfer of the fixed assets, right? So what does it say? Immovable property, land or building have been sold at less than the government valuation, and land or building or both have been sold at the less than the government valuation, right? So yes, 105%, 110%, up to that much it is allowed. Okay, right? So that is the clause 17 of form 3CD, right? That is the clause 17 of the form 3CD. Okay, clause 16 we just saw right now, amounts not credited to P&L, and then 21 is regarding the amounts debited to the profit and loss account, right? Where do you do the reporting in in tax audit regarding the form 61, 61A and 61B? Whether the assessee is required to furnish the statement under form 61, 61A and 61B, and whether that reporting, whether those forms have been furnished under which clause of form 3CD the tax auditor is required to report under clause, yes, under clause 42 of the form 3CD, whether the assessee is required to furnish a statement of particulars of form 61, 61A and 61B, right? What is form 61? Right? What do you say? Receiver of form 60. When do you get the form 60? When the person with whom you are entering into a transaction does not have a PAN. So he gives a declaration in form 60. So receiver of form 60 has to file the form 61 with respect to specified financial transaction. Right? Then 61A is regarding the specified financial transaction like buyback of shares of 10 lakh or more or so. And 61B is regarding the FATCA, the Foreign Account Tax Compliance Act. Right? So whether the assessee has complied with the provisions of the Foreign Account Tax Compliance Act. Right? So 61, 61A and 61B. Where is the reporting required to be done? Under clause 42 of the form 3CD. Okay. Right. Can you quickly tell me what are the process of forensic accounting? Can you tell me what is the process of forensic accounting? And a process of, now you have to able to identify the question because this is how it has been given in the book. And I can't make it simple and make you, make it relatable for you. This is how the question is. The process of forensic accounting. In simple word, it means what are the steps involved in conducting a forensic audit, but now you call it as forensic accounting. Right? What are the steps involved in conducting the forensic accounting? Develop the, right? First, what you do? Yes, the process of forensic accounting. Are you able to identify? Yes. See, this is what you need to check. This is exactly. मैं बोल रही हूँ ना, और भर भर के कितना भर के लेके जाओगे एग्जाम में, जितना है वो ठीक से identify. Are you able to identify the question? That is super important. Right? So first, what you do? Yes, you do the initialization. Initialization, and that what you do? You identify the objective and the scope of the work. Right? So initialization. Then after the initialization, once you know okay, you have to find out the regarding any, some legal evidence or something. Then after that, once you do the initialization, then you accordingly develop your plan. Then based is you develop your audit plan or you develop the plan. Then based on the plan, you obtain the evidence. Based on the plan, you obtain the evidence. Then based on the evidence, you perform the Based on the evidence, you perform the analysis. Then based on the analysis, you reach the conclusions. And then based on the conclusions, you could use it in the court proceedings, right? It could be used as an evidence in the courts of law, because that is the meaning of the word forensic, which can be used as an evidence in the suitable on or before the use of the forum, which can be used in the courts of law. Right, performing the analysis, right? How do you perform the analysis in the forensic audit of whatever evidence you've obtained? You summarize a large number of the transaction. You calculate the economic damages. Then you also calculate the present value, right? Applying the appropriate discount rate, right? Then you also do the regression sensitivity analysis. Then you utilize the charts and graphs to explain your analysis, right? You also utilize the spreadsheets, right? In order to give the presentation, right? So that is performing the analysis. And conclusion, it says it's the final step of the fraud audit, right? So how the fraudster set up the fraud scheme, what were the steps involved, how the fraud was identified, all that needs to be mentioned. And it says for this, the forensic auditor, he should be having the active listening skills, because one exam question is coming, process of forensic accounting, big question coming in the exam. Okay, what is the process of forensic accounting? Another question which they've already asked in your exam, so it is not imagination, it is reality. Okay, how do you perform the analysis under the process of forensic accounting? Or how do you do the reporting, the conclusions under the process of forensic accounting, right? So even one single heading can become a separate question in your exams. Even one single heading can become a separate heading in your exams, right? So that is regarding the process of the forensic accounting, right? The process of the forensic accounting. Okay. Next one. So easy question. Siddha Limited, a company wholly owned by central government, was disinvested, right, during the previous year, resulting in 40% of the shares being held by the public. Wholly owned by central government was disinvested, resulting in 40% of the shares held by public. But still, is it a government company? Yes, because 60% is still held by the government only. The shares were also listed on the BSE. Since the shares were listed, all the listing requirements are applicable. Mahavir, the FM of the company, is of the opinion that now the company is subject to stringent control by BSE and the markets. Therefore, the auditing requirement of a limited company in the private sector would be applicable, and the CNAG will not have any role to play. Comment. No, CNAG will still have the role to play. Right? CNAG, will they appoint the auditors of the company within 180 days from the commencement of the financial year? Yes. Right? Can CNAG conduct a supplementary audit of the financial statements? Yes. Can they issue a supplementary audit report? Yes. In addition to that, can CNAG conduct a test audit of the accounts of the government company? Yes. Because though it is listed, though 40% public, but still, does it fit into the definition of a government company? Yes, it is still a government company in which not less than 51% of the paid up share capital is held by the central government, state government, partly by central or the state government, or which is a subsidiary of a government company, right? So listing of these shares on the stock exchange is irrelevant, and Mahavir's opinion is not correct. Okay, next one, interesting question made over there. CA Sanjana is acting as the credit manager in the branch of DFC Bank Limited. A company has approached the branch for a request to sanction credit facility worth 10 crore for meeting usual business requirement. It is a prospective new client. She checks past history of the company, background of the promoters and directors, shareholding pattern and nature of business. Assessment of financial result of past years and future projection is also undertaken. She also carries out a SWOT analysis of the company. Besides, assessment of net worth of directors is also undertaken. Status of CIBIL score and position of name of promoter, director in RBI defaulter list is also verified. She also makes discrete inquiries from few clients of the branch engaged in similar line of activity regarding credit worthiness of the company, its promoters and directors. Based on the above, identify the activity being performed by CA Sanjana and discuss its nature. Right? So what is Sanjana doing? She is doing the due diligence and evaluation of a prospective business decision. Now Sanjana, she is a chartered accountant. Would your answer be different if this activity was to be performed by a person who was not qualified as a chartered accountant? Can non-CA perform such an activity? State the reason. So can a non-CA also? Yes, any reasonable and prudent person can perform such activity. And name any other three areas where the identified activity can be undertaken. Right. So other areas, whenever a merger, amalgamation, a spin-off, or venture capital financing is to be done, even there this particular due diligence can be done. Right. So the activity described in the situation is due diligence. So generally, what are the popular questions we have? Okay, what are the areas covered in financial due diligence? What are the contents of the due diligence report? What are the areas covered in due diligence and the types of due diligence? But now they say this is all what is being done. And what is this? So this is nothing but the due diligence, right? So again, a star marked question over there, right? Is a measure of prudence activity or assiduity, that is a type of an assurance, or as is properly to be expected from and ordinarily exercised by a reasonable and prudent person under the particular circumstances, not measured by any absolute standard, but depending upon the relative facts of the case. You'll have to learn this content over here. It involves a careful study of the financial and non-financial possibilities. It implies a general duty to take care in any transaction. Right? So that is what is due diligence. What does it say? A reasonable and prudent person under the particular circumstances, not measured by any absolute standard, but depending upon the relevant facts of the case. Due diligence is a process of investigation. So it's a type of an investigation performed by investors into the details of a potential investment. It's an examination of operations and management of the verification of material facts. It entails conducting inquiries for the purpose of timely, sufficient and accurate disclosure of all the information which may influence the outcome of the transaction. Due diligence involves a careful study of the financial and non-financial possibilities for successful implementation of the restructuring plans. Due diligence involves an analysis carried out before acquiring a controlling interest in a company to determine that the conditions of the business conform with what has been presented about the target company, the acquirer company and the target company. Also, due diligence can apply to recommendation for an investment of advancing a loan credit. Right. Then what does it say? What if Sanjana is not a chartered accountant or any person other than a CA does so? There would be no difference if above activity was to be performed by a person who is not a CA. The activity would still remain due diligence. Due diligence can be performed by any person. It is not necessary that due diligence can only be carried out by a chartered accountant. As due diligence involves exercise of the prudence and general duty to take care in the transaction, it can be undertaken by any person. And what are the areas where this due diligence can be done? Corporate restructuring, venture capital financing, public offering, etc. Right. Next one is again a star mark question over there. Right. So secretarial staff of the quality review board, right, is in the process of preparing a panel for submission to the quality review board to enable it to initiate reviews of the quality of audit services provided by members of ICAI. The draft panel has been prepared by a junior staff in QRB Secretariat, and it has moved up in hierarchy for vetting by a senior staff R before being put up in the upcoming meeting of the Quality Review Board for its consideration. The draft panel contains details of the following entities audited by different audit firms. Okay, these particular audit we will do the quality review of. Figures are of immediately preceding year and are in rupees crore. Is the inclusion of the name of audit firms of corresponding entities in the draft panel to be put up before the QRB appropriate? Guide Mr. R. Right. So you have the quality review cycle, on what basis? Selection of the audit firm, random selection, high risk area, market intelligence report, how the audit firms and how the audits are selected for the purpose of the quality review. Right. So one, it says the NAFRA based on the firms being audited on random basis, number of partners of the firm. Right. One, what does it say? The quality review board, they can decide upon the quality review to be done. And one, if reference is made by the NFRA. And if NFRA says that this CA, this auditor, this audit file, it should be quality review should be done, then that particular audit file, though compulsory, the quality review has to be done. Right. Where reference is made to the quality review board by the NAFRA, by the National Financial Reporting Authority, then so it says compulsorily the quality review has to be done. Right. Section 132. Yes, what is section 132? Question asked 2 to 3 times in your exams is regarding the applicability of the NFRA. Can anybody quickly tell me which are the companies to which NFRA provisions are applicable? which are the auditors and auditors of which companies to which the NFRA provisions are applicable. Whenever a list of applicability is being prepared, number one to go and stand in the list is the listed company. Correct. Right. Then apart from listed companies, the unlisted public companies having the paid up share capital of more than or equal to 500 crore or having the turnover of more than or equal to 1000 crore or having the borrowings or deposits of more than or equal to 500 crore. Right. Then what does it say? The insurance company and the insurance, banking and the electricity supply companies, right? So insurance, banking and the electricity supply companies where reference has been made to the NFRA by the central government, it is in the public interest. So reference has been made to the NFRA by the central government that these are in the public interest, that is the public interest entities, PIEs. And where what does it say? Any 1 to 4 above, any subsidiary or associate of any of 1 to 4 above, right, which contributes more than 20% of the consolidated income or the net worth, even that is to be included, covered under the purview of the NAFRA. Even that would be coming under the purview of the NAFRA. Right, so that's the applicability of the NFRA. Okay, so these come under the purview of the NFRA. So for these companies, NFRA will decide whether quality review is to be done or no. There is no need for the quality review board to decide. And it was the NFRA which will decide. Okay, now what does it say? Listed status. Right, XYZ Limited, unlisted public, then PQR listed in BSC, NSC, NYSC, X Insurance Limited, and then after that the AAZ is unlisted company. Right, so now what does it say? Listed. Do they compulsorily, will it have to be decided by the quality review board? No, that will be determined by the NFRA. Okay, then X Insurance, again what we said, it's an insurance company. So it would be decided by the, right, again the NFRA. Okay, now you have these two, unlisted public and the unlisted, education, technology and manufacturing. And year 450, 1200 and 450. And year 200, 800 and 200. Right, 200, 800 and the 200 is the inclusions of the names of the audit firm of corresponding entities in the draft panel to be put before the QRB. Appropriate, guide Mr. R. Right, so whether it is appropriate, what does it say over here? Right, so one, you need to write down the applicability of section 132. Then the Ministry of Corporate Affairs, considering the above, what does it say? In the case of auditors of XYZ, PQR Limited and X Insurance Limited, NFRA has the power to oversee the quality of services of these audit firms, and NFRA can make a reference to the quality review board. However, quality review board can undertake review of the quality of services of auditors of AAZ Limited. Therefore, inclusion of name of auditors XYZ, PQR and X Insurance in the draft panel for consideration by QRB is not proper. Only the inclusion of AAZ Limited in the draft panel is proper. Right? Is it clear to all of you? Right? So why? Because these are coming in the applicability of the NFRA, only the last one not coming. Okay. Next one, ethics. Time flies, we've come towards the end, but quite an effective job we are doing. Okay, so is a practicing CA based out of Chennai. Okay. During the weekends, he involves himself in equity research and used to advise his friends and relatives and other known people who are not his clients. Apart from this, so one, he is doing equity research, but he should not publish a retail report, right? Otherwise, he can work as an equity research advisor. Apart from this, he was also involved as a paper setter for accountancy subject to the school in which he studied. Paper setter allowed. He also owned agricultural land and was doing agriculture during his free times. Agriculture activity allowed. During the year, heavy losses were incurred in agriculture activity due to natural calamities and misfortune, and he lost almost all of his wealth and became undischarged insolvent. Okay. After a few court hearings, finally in the year he was declared discharged insolvent and obtained a certificate from the court stating that his insolvency was caused by misfortune without any misconduct on his part. You are required to comment on the above situation with reference to the Chartered Accountants Act and the schedules thereto, especially from the point of Section 8, entry of name in the register. When age less than 21 years, right? Then what does it say? Yes, who is an undischarged insolvent or discharged insolvent who's not obtained a certificate from the court that his insolvency was caused due to misfortune. But here he has clearly obtained a certificate from the court that his insolvency was caused due to the misfortune. Okay, right. So that is such a comprehensive question. That's the new style they have nowadays regarding asking the question from the ethics, right? So involve himself in equity research. So again, as per the recent decision of the Ethical Standard Board, a chartered accountant may be an equity research advisor, but he cannot publish a retail report as it would amount to other business or occupation. So obviously other business or occupation that comes under clause 11 of part 1 of the first schedule. Right, clause 11 of the part 1 of the first schedule. In the given case, Mr. S is involved in doing equity research and advising people. It is clear that he does not publish any retail report. Hence, this act will not make him guilty of professional misconduct. S is involved in paper setting and agricultural activities. What does it say? Valuation of paper and owning agricultural land and carrying out agricultural activity. It is given in the list of the permission granted generally. Therefore, in the given case, the activities as a paper setter and involvement in agriculture activities do not make him guilty of professional misconduct. Okay, right. And then what does it say? Section 8. It debars the name of a member to be entered in the register of members if he is being a discharged insolvent, has not obtained a certificate from the court that his insolvency was caused by misfortune without any misconduct on his part. In addition, failure on the part of the member to disclose that he suffers from any of the disabilities above would that itself constitute professional misconduct. Okay, right. His name could be removed from the register of members. In the given case, it is clear that S was discharged insolvent and he has also obtained from the court a certificate stating that his insolvency was caused by misfortune and therefore he is not debarred from having his name entered in the register of the members. Okay, so rather than putting 3 separate questions on the ethics, they've just prepared one comprehensive question over there, right? That is question number 24. And then after that, you have 3 questions over here. Categorization of the NBFCs, right? So you have the base layer, then the base layer or the middle layer, then the upper layer and the middle layer, right? And then the role of the risk management committee, which we had seen that there has to be a risk management policy, right? Then the appropriate systems, then also the implementation of the risk management policy, then review the risk management policy at least once in every 2 years, keep the board informed, and also appointment removal in terms of remuneration of the chief risk officer, if any. And then you have the qualities of the operational auditor. He should be inquisitive, he should ask who, why, how of everything, should maintain an attitude of skepticism, should be having a collaborative and constructive approach rather than having the fault finding approach. Okay, right? So categorization of the NBFCs. What does it say? Yes, the primary, then the account aggregator, financial holding, and without having public funds and the customer interface, they will always remain in the base layer, right? Then the deposit taking, core investment company, then the infrastructure finance and the housing finance, they will be in the middle layer or the upper layer. And what does it say? The standard primary dealers and the infrastructure debt fund, they will always remain in the middle layer, and the remaining NBFCs, it could come in any of the layers, and government owned NBFCs will be in the base layer or the middle layer. They will not be placed in the upper layer till the further notice. And then you have the role of the risk management committee and also the qualities of the operational auditor. Right, so few days into the exam, few days before your attempt, it's a wonderful thing, you know, to go through the RTP, MTP and so. Why? Because it gives you a round around the entire subject over there, right? It gives you a, you know, it's like you're taking a walk in the gardens, you're taking a walk around the entire subject when you go through any MTP, RTP or suggested. Okay, for the time being, tell me what is clause 7 part 1 second schedule. Yes, everyone, all of you in the class, tell me. You're not in the class, you're at your home. Okay, wherever you are, tell me what is clause 7 of part 1 of the second schedule? What is it? Yes. And then start typing over there what discussions you want me to do for tomorrow, because students had a curiosity. As if, they are, one day if they are wish, if allowed to them, no, they will ask ICA also. ICA, you please clearly tell me which all questions you're going to come ask in the exam. Only those ones I will prepare. They want everything to be informed to them. Okay, what is going to be discussed, then time stamped, where what is discussed. No adventure, no scope for creativity or something like that. No, then how you will clear the exam, रे बाबा? ठीक है, तो अभी बोलो. Plus 7 part 1 of the second schedule. My students will clear the exam. Yes, I am waiting, for your successful results. Okay, right. Yes, clause 7 part 1 of the second schedule does not exercise due diligence or is grossly negligent in the conduct of his professional duties. And does not exercise due diligence or is grossly negligent in the conduct of his professional duties, right? Clause 7 part 1 of the second schedule. Okay, right? What is clause 4 part 1 of the second schedule? Yes, clause 4 part 1 of the second schedule. You know this one? Clause 4, part 1. Not first, second schedule. Second schedule, part 1. उसमें clause number 4. As per clause 4 of part 1 of second schedule to the Chartered Accountants Act 1949, a chartered accountant in practice is deemed to be guilty of professional misconduct if he does what? Expresses his opinion on the financial statements of any business or enterprise where he, his partner, his firm, or his relative is having the substantial interest. Expressing opinion on financial statements where substantial interest is involved. Guilty of professional misconduct under clause 4 part 1 of the second schedule. However, what is allowed? Information system work related to the employer would be allowed. Right? So if I am the statutory auditor of a company, can I be appointed as an internal auditor? No. Right? If I'm an internal auditor, can I be appointed as a tax auditor? No. Right? Substantial interest. You cannot express an opinion on the financial statements. Are you understanding that? Where substantial interest is involved. However, information system work would be allowed. Okay. And one more over there. Clause 8 of part 1 of the first schedule. Bolo. Tell me. Clause easy teasy. Is it easy? Very easy. Clause 8 of part, so first schedule, part 1. 1, 2, 3, 4, 5, 6, 7, 8. Practice by non-CA sharing, accepting, partnership, canvassing, soliciting, advertising. Advertising. NOC. अभी NOC एग्जाम में क्लॉज कैसे लिखोगे भाई? How will you write down the clause in the exam? You'll write NOC. NOC will not give you marks. What you'll have to write? Guilty of professional misconduct if he accepts appointment as an auditor previously held by another chartered accountant without first communicating with him in writing. Correct? And this is how you'll write. No compromise on writing of the answers. What does it say? Accepts appointment as an auditor previously held by another chartered accountant without first communicating with him in writing. Right, so incoming auditor, you need to obtain an NOC from the outgoing auditor. Other Otherwise, you will be guilty of professional misconduct under clause 8, part 1 of the first schedule. Are you understanding that? Right? Guilty of the professional misconduct. So what does it say? Incoming auditor, you need to send a request for NOC to the outgoing auditor. How can the incoming auditor send a request for NOC to the outgoing auditor? When he has to send before accepting the audit and wait for a reasonable time. But how to send the request for NOC? You have two traditional means and two modern means. What are the traditional means? One, by hand against the written acknowledgement, or by the registered post acknowledgement due and not under the certificate of the posting, or you can get an acknowledgement on the email address, which is the registered email address or the last known official email address, right? So acknowledgement on email, right? Email address which is registered with the institute, or the last known official email address, or a UDIN is generated for the same, right? A unique document identification number is generated for the same, right? So what is this? This will give the positive evidence of delivery of communication with the outgoing auditor, right? Positive evidence of the delivery, right? So positive evidence of the delivery. And incoming auditor, you need to consider what are the professional reasons for not accepting the appointment. Like previous auditor is has given a qualified opinion, or the accounts have not been properly maintained, or he has resigned or so. So you need to consider the professional reasons for not accepting the appointment. What if the undisputed audit fees of the previous auditor have not been paid, but the company is willing to pay, but it is not possible to transfer the funds electronically, or the auditor is otherwise not available, the retired earlier auditor? Then you advise the company to purchase a demand draft, and then you accept the audit and you ensure that the payment is done at the earliest possibility. What if the premises were found locked? Deemed to be delivered. What if the firm was not found at the registered address? Again, deemed to be delivered. Right? Then undercutting of fees, is it guilty of professional misconduct? Outgoing auditor was doing audit for 70 lakh. Incoming auditor is ready to do the audit for 2 lakh. Will it be guilty of professional misconduct? No. Undercutting of fees is not guilty of the professional misconduct. Are you understanding that? Is statutory auditor required to obtain an NOC from the internal auditor? No. Statutory auditor has to obtain NOC from previous statutory auditor. NOC is required for the replacement positions and not for the parallel positions. It is required for the replacement positions and not for the parallel positions. NOC is a mandatory requirement where previous auditor is a chartered accountant, and previous auditor is not a chartered accountant, then it says healthy practice to communicate. Government audit, they can give a conditional acceptance and start with the more important work immediately, right? Generally, you wait for a reasonable time, but in case of government audit, they can give a conditional acceptance and start with the more important work immediately. Right, tell me the exceptions to clause 10. Yes, there should be a rain in my chat box now. Rain falls this way, but chat box goes up this way, whichever way, no problem. Right, tell me the exceptions of clause 10 of part 1 of the first schedule. Fatafat, quickly. Activated now, brain cells activated regarding audit. Shooting, able to shoot all the answers. All brain capacity utilized. Chalo bolo jaldi. Clause 10 part 1 of the first schedule. पहले तो ये है कौन? Who is this one? Yes, this is charges or offers to charge, accepts or offers to accept in respect of his professional engagement. Any fees which are based on the percentage of profits or which are contingent upon the results of his finding or of such employment, except as permitted under the regulations under the act, right? Except as permitted under the regulations under the act. And what does it say? What is permitted under the regulations under the act? Acting as a receiver or a liquidator, right? Receiver or the liquidator. Then auditor of a cooperative society. Then you have the valuer for the direct taxes and duties, right? Then after that you have the certain management consultancy services. Then you have the certain fundraising services, right? You have the certain fundraising raising services. Then you have the debt recovery services, right? You have the debt recovery services. Then you have the cost optimization services, the cost optimization service, and any other service or audit as may be decided by the council, in which they have decided to: one, acting as the insolvency professional, or second, providing the non-assurance services to the non-audit client. Right? Second, providing the non-assurance services to the non-audit clients. What is that? That is clause 10 of part 1 of the first schedule. Percentage contingent basis, guilty of professional misconduct under the clause 10 of the part 1 of the first schedule. Right? Clause 10 of the part 1 of the first schedule. Okay. Right. Can you quickly tell me the sources of fraudulent financial reporting? Let me see. Can you quickly tell me the sources of the fraudulent financial reporting? Sources of FFR, fraudulent financial reporting. Yes. When there is the, so there are two types of fraud: fraudulent financial reporting and the misappropriation of assets. Right now I am asking you, what are the sources of fraudulent financial reporting? Yes, manipulation, falsification, or alteration of the accounting records, right? So there is manipulation, falsification, or the alteration of the accounting records. Then recording the fictitious journal entries, particularly close to the end of an accounting period, to manipulate operating results or to achieve other objectives. Right? Then the intentional misrepresentations or the omissions being made. Right? Intentional misrepresentations or the omissions being made. Right? Or the omissions being made. Then disclosures have been given, but disclosures have not been, one, no disclosures have been given. Second, disclosures have been given, but they have not been given in accordance with the AFRF. And the disclosures are not given as per the applicable financial reporting framework. Then omitting, that means not recording at all, or advancing, that is next year showing into the current year, or delaying, that means this year showing into the next year, delaying recognition of financial statement items. And omitting, advancing, or delaying recognition of the financial statement items, right? Concealing, not disclosing the facts which is material to the financial statements, right? Then also inappropriately adjusting the assumptions which are used for estimating the account balances, right? Inappropriately adjusting the assumptions which are used to estimate the account balances. Are you getting this one, everyone? Right? So what are these? These are the sources of the fraudulent financial reporting. These are the sources of the fraudulent financial reporting. Okay. Right. Then as such we say, okay, auditor, you need to maintain the proper audit documentation. SA 230. SA 230 says that auditor, you need to maintain the proper audit documentation. So now I need to document whether I have done my audit in accordance with the standard. I need to document whether I exercise, whether I maintain professional skepticism throughout the audit. Is it possible? Is it practicable? Is it necessary to document compliance with each and every essay? That how you maintain your skepticism throughout the audit, you have to document. Is it practicable? Is it necessary? It is neither practicable nor is it necessary. Because what does it say? If I have issued an engagement letter, if I have agreed the terms of engagement with the management, that means I have complied with SA 210. You understand? If I have prepared an audit plan, if auditor has prepared an audit plan, that means the auditor has followed the requirements of SA 300. If auditor has modified his opinion, that means auditor would have considered the requirements of SA 705 before modifying his opinion. And there is no single way by which professional skepticism can be documented. There is no single, like you can't say, oh yes, I have been alert throughout the audit. There is no single way. by which the skepticism of the audit can be documented in the audit file. So it is neither necessary nor practicable for the auditor to document any of these like separately in his working papers, because it is implied. It is implied, right? So this was one of the questions asked in the recent exams. Okay, right. Then there are complaints and allegations. This CA form, no quality control policies and procedures. There are a lot of complaints and allegations, right? Complaints, what the firm employees are saying, oh, this firm, they are not doing the audit properly. There is no proper quality control policies and procedures. There is no quality control system in the CA firm, right? So one, what does it say? The junior wants to say that my senior never reviews my work. My senior never looks at what I'm doing in the audit. And so SQC1, when I talk about complaints and allegations, that means I'm talking about SQC1. Right, so my senior never looks at my work, or the client wants to file a complaint against the CA firm. Okay, oh, the CA, he forgot to put the key audit matter paragraph in the audit report, in the consolidated audit report. That happened. Okay, some of you might not be aware of the reality happening in the world outside right now. No problem. You be in your own world. That is good for everyone. Okay, right. So one, the complaint could originate from outside the firm, or it could be a complaint which could be within the firm. Then there should be clearly defined channels regarding how any person can make a complaint against or regarding the firm. Then the firm should be having the proper policies and procedures regarding who will address that particular complaint, right? Who will investigate into the matter. It should be a person who is responsible other than the engagement partner, who should investigate into the matter, and based on the investigation the further action which is required to be taken, right? Okay, what corrective action is required to be taken, what improvement is required to be made in the improvement in the system of quality control of the CA firm, right? So that is regarding the complaints and allegations. So just as the building is constructed, they put the foundation, then they put the rods and the cement and everything, and then they construct the electrical fittings, and then finally the building gets constructed. You realize over here, okay, you are required to construct an answer. You have lot of bricks with you. You have so much, 100 bags of cement with you. But you can't just put any cement anywhere, any brick anywhere. It will look like a haunted fort in that case. It won't look like a modernized building over there. Right? So whatever data content is there with you, you analyze it properly, and I'm telling you one more time that you identify the question correctly. Okay, right. Just before we conclude for today, can I know which topics would you be interested in for tomorrow? Though I will take what I think is appropriate, but I certainly would, if possible, include your suggestions also. Bolo. Yes. Nothing? All done? All good? One day only we knocked out the subject. No need for 3 days to knock out the subject. Questions of standard. अच्छा, full audit. ये तो best है. Important areas. Okay. Insurance. हाँ, अब एक नाम आ रहा है chapters के. Insurance. PSU ma'am. Okay. PSU ma'am, who is this ma'am? No, but okay, I understand. Public sector undertaking chapter. Questions. 3CD. Up randomly questions low, we'll get more clarity. You'll assess the reality, no? Okay, other topics, tax audit clause. Yes, more of question based, standard, peer review, quality review, corporate governance. Arey wow. You'll get more clarity. Yeah, you liked it, no? Today when I took the questions, it gives you more clarity. Yes, good. Right, so I'll try to cover more of the questions, whatever. So you're giving me such precious time of yours. This time is more precious than a diamond itself. So thank you so much for your patient listening. And in case if anybody of you would be joining tomorrow, before that you need to see today's session, and then we meet for the class tomorrow. Right, so important randomly bank insurance, right? So I'll try to cover bank insurance, LOTR like today or something like that. Okay. Right. So wonderful. Have a great evening. I hope still two more shows for you are remaining to study the subject, to prepare for your exams. You'll say, ma'am, you are stopping at 9:30. For us, it will be 4 o'clock in the morning by the time we finish our study for today. Okay. Right. So wishing you good luck with your preparations. Bye bye.